Good morning, everyone. Welcome to our Monday morning trading room. It's a little bit of a short week this week with the Thanksgiving holiday later this week, so it's always a little dicey around holiday time to see what the markets are going to be doing. So we just saw the market open, and we're pretty much taking over from where we left off last week. This was Friday's session. We were in kind of a slow drift lower. Here's the pre-market this morning, and this is where we're starting the day, pretty much exactly where we left off. So the good news is no opening gaps to worry about this morning. I'm probably slightly more bearish on the market, I think. But we'll see how the day plays out. Okay, so far we've got some yellow bars printing here in the Hawk. The Falcon trend line already changing over. The Eagle slightly bullish, and we may even produce, oh, there was a buy dot there for a second. I was going to say we might even produce a first in sync signal to buy here on the Eagle. But given the slight downward drift of the market, this almost looks a little bit like a bear flag to me. Part of the problem is we haven't seen a really good retest of the low. And of course, the Raptor as well kind of gives us the same look. In fact, the Raptor, if this produces a buy signal, it's going to be our #1 cloud crossover signal. So the Raptor actually looking a little bit more bullish right now than some of the other tools. But it is still really early. We're only a couple of minutes into today's session. So we'll see how things play out here. We've got a 4-arrow consolidation now here on the Hawk. And here's that cloud crossover signal on the Raptor. Now, it's still a little early for me, so I'm going to consider this cloud crossover. I'm going to wait for the second push opportunity. All that means is I've let the signal engage. I'm going to see if the sellers try to knock it down a little bit, because otherwise my stop has got to go way down here, and I know I can't afford that. That's going to be a little bit out of reach for me. So we're getting a little bit of a reaction now near that swing high. But what this enables me to do is actually cover the trade a little bit tighter. I can probably get by right around there. And what I'm essentially looking for is some momentum on the breakout. Yeah, I agree. Anthony says here we got a strong downtrend. It's kind of following through from Friday and even the latter part of Thursday, the market started to turn over a little. I think a lot of traders are looking for a little bit of a downside correction. I've shown you this before. Let's get the daily chart up here. Here's your daily NASDAQ chart. And we had a big run up here, but the market's starting to fail. You know, this looks a lot like when you throw a ball high in the air, how it arcs, and now it's almost ready to start coming down. We did make a slightly lower low last week, which we haven't done for a while. So that's a big number right there. That is 62.30 and 3/4. We trade below there, I think you're going to see a lot more aggressive selling. Oh, before we leave this, let's just take a quick look here at the volume. And this is the other thing to take note of. The volume is tailing off here a little bit. Which is not what you expect in an advancing market. And you don't like to see these blow-off spikes either. These suggest that there was a whole lot of traders starting to exit the market. So keep an eye on this, but right now, that's how things are starting to shape up. They're starting to look a little bit more bearish kind of across the board. Not to say, you know, the stock market's going to fall off the map, rather that we may just see a little bit of a correction. But right now, the market is definitely a little bit more on the bullish side, as we're seeing a little bit of a rally. Got filled on the second push attempt on that number 1 signal. Did they slip me a tick? I can't see. They did too. So we're getting not as much volume as we normally see. The NASDAQ, not a market that where slippage tends to be a problem. The Falcon coming across now with the trend change signal. Here's your first in-sync signal on the Eagle, so we are looking a little bit more bullish. We're up against this resistance line here, which is 63.26 3/4. If we can see 63.27, maybe 27/4, I think we'll be in good shape. Wow. I'm wondering if I should stretch this out a little bit. Maybe try to take it to the next resistance line. Come on, get up there. Break even here just below 63.30, and my profit objective was just a couple of ticks above there. And we're plodding along here, but I'm going to get ready with a more aggressive stop once we get to the break even. Come on, get up there. You can do it. All right, there we go. I'll take it to break even. Oh, you scoundrels. Sometimes it helps if you hold your breath. Oh, and I forgot the magic mouse. Let's actually move the market here just to get us over that break-even hump. Sometimes if you push the bar up, come on, get going higher. Nope, wouldn't do it for me. Well, had I taken the number one signal where it printed, I would have found my high probability target. Not a whole lot more than that, I'm afraid. But we are still slightly bullish, given this recent little rally. I was a little concerned about that slip when on the fill. Like I said, a market like the NASDAQ doesn't normally slip you. Now, it was only a one-tick slip, but we're only about 10 minutes into the day. There should be more than enough volume. I'm wondering how many traders are taking the whole week. Next to Christmas, of course, the Christmas New Year break, this is probably the biggest holiday as far as the markets are concerned. Yeah, there's actually a few comments here about the Thanksgiving holiday. Scott asks, good morning. Well, good morning, Scott. Are you taking the Wednesday off? I am. And Mark writes, tomorrow's my last day for the week, heading to Michigan for Thanksgiving with my in-laws. I think we're going to follow that route as well. Today is just really, really slow. And of course, tomorrow is going to be like the day before travel day for many of you. And the big prep day. So I think that's what we will do as well. We're here now, so we may as well hang out for a little bit. I did try to trade the Friday after the Thanksgiving holiday last year, only because there was a fair amount of demand for it, but oh my goodness, was it a waste of time. There was absolutely nothing going on. A lot like this, actually. Oh yeah, Scott says, what made you think Friday was going to be good? It wasn't my idea, Scott. It wasn't my idea to trade the Friday after Thanksgiving. Paul, I am so glad you are in the room here this morning because I just got your email. I was reviewing it and I was going to see if you were here so that I could go over some of your questions. Paul sent me an email regarding how can you identify which Raptor signals are likely to be profitable ones. And Paul's asking also about the Raptor filter. So we don't have anything going on right now, obviously. So let's take a look at the Raptor signals themselves and hopefully how you can identify which signals are going to have some follow through for you. All right. Now, first thing you need to note is that if you've been struggling the last month or so with trading, the markets have been dismal. They really have. I've been doing this for a while now, and I can quite honestly say I have not seen the markets this quiet. I can't remember when. So we're trading at a very unique time. Okay, normally the markets have a lot more volatility to them. They pick a direction, they move 10, 20, 30 ticks in one direction. They may change their mind and move the opposite direction, but there's always some volatility. Right now, we are really low on the volatility scale. In fact, if I pulled up a VIX index, the volatility is probably really, really low. So that's causing some problems for us. So try not to get too frustrated with your trading because, like I said, this is a very unique time that we're trading. Okay, so now to go to your signals. Let's start with the number one signal. The number one signal on the Raptor attempts to show you when a new trend is developing. It's called the cloud crossover signal because it develops when the clouds cross. So they go from a bearish stance to a more bullish one. A cloud crossover signal will very often be preceded by a number two signal, which is actually the counter trend signal, which we'll get to in a little bit. The Trend change signals are always going to be most reliable when you have seen a test of the extreme preceding it. So in the case of a downtrend, we had a market in a downtrend, it was coming up, it failed to continue the downtrend, then it started heading the opposite direction. Somewhere through here, the clouds crossed, and then we produced a number one signal. After a small pullback, we produced a number one signal. This is going to be your best setup for a number one signal. This is going to produce the most reliable results if you have these factors preceding it. This test of the extreme is a big one because it essentially shows you that the sellers can no longer control the market. The clouds crossing over kind of confirm that. And then when you get that little bit of a pullback, that's almost the dying effort of the sellers to pull the market together. And then we come back with a buy signal. Let me scroll back here a little bit and see if I can't find you one. Okay. Before I get into that, though, however, take a look at this chart here from Friday. This is just further evidence of how uncommitted the markets are at the moment. If you open up your chart and it looks like this, you may as well leave the market alone for at least an hour and come back and see if things have improved. This should be screaming at you, sideways market, stay away. You may luck out and pick a signal here and it may actually work out, but if you try to trade this, you can see you're just going to get beat up. Most of these signals work out, but a lot of them don't. Here too, right? There's no discernible trend. There's nothing really here to trade. So if you're trying to trade these signals, I understand your frustration. All right, let's go back here. Okay, so here actually two good number one signals. One right here, one right here. This one is actually the better signal because we've had a little bit better test of the extreme. We had a little bit of an uptrend here. The market comes down. Buyers are trying to recapture the market and they fail. And we get the clouds crossing. The market pulls back a little bit and we produce a signal. This is a signal that you can take with a great deal of confidence. At least that is going to hit your high probability profit objective. It's not necessarily going to go to the moon, but it should at least trade far enough to hit your high probability profit target. Let's take a look at the next one. Okay, so it was your test of the extreme here. It's not as nice as this one is. I usually like to see the market actually show some effort to regain the trend. If we had seen a test of the extreme like this, it would have made it a little bit easier, but as it turns out, the market ended up going a little bit sideways. Probably because this is well after hours now. Here's a little bit of a retest. Here the market comes up and produces the number one signal. It's not quite as solid looking as this one here, but given how far the market is moving and it looks like the buyers are in control, there's a number one signal that you could certainly try to take advantage of. And that one too, I believe, got to its profit target. Now you're going to notice a lot of times the market will hit the high probability profit objective and then give you some sort of reaction. That's what happened to me that's what happened to me this morning when I tried this trade. Now, it was still very early. It was only like a minute after the open. It's not really my favorite time to trade, but had I taken the trade, at the hash mark, I took it actually up here. The market got up, hit the high probability profit target, and then flinched again. So you're going to see that a lot, especially the way the market is reacting right now. This one, it was worth a try because we saw a couple attempts to move the market lower. Again, it's not really pretty. We don't have a really solid test of the extreme and failure as what we would see in normal market conditions, and I'm using air quotes when I say normal. Let's just allow me to scroll back here a little bit. I'm going to make you dizzy for a second and see if we can't find another decent signal. Okay, this one's not bad. This one's pretty good because once again, see what precedes it? You know, there's a trading expression that says you have to look left to be right. And all that means is it's a good idea to consider the context, what's preceded the market. So what's preceded this market is we've had an uptrend. Prices come down. They try to regain the uptrend, but oh no, they can't. And then we start trading lower, right? So we're taking out areas of support. That's a big one. The clouds cross, the market retraces, and then tries to resume the new trend, and there we get our number one signal. All right, so there's a decent number one signal that you can take advantage of. Now notice a lot of times you're going to have to wait a little while for some of these signals to actually produce. And that one too came down and hit the high probability target. This number one signal, it worked out. Again, it's not as nice as some of the other ones because we don't have a really good test of the extreme here, do we? This was probably it right here. But the clouds crossed anyway. And if you're going to take the trade, you can, if you're going to take a trade that you're not sure about, so here the number one signal prints, you look at this and you say, gee, I don't know, the market may come down here further, try to retest the lows. I really can't afford to place my stop all the way down here, so what do I do? Well, you have essentially three options. Option number one is that you place a overly tight stop and you hope for the best. I wouldn't necessarily go in with two contracts, but you can place a tighter stop and hope that the market doesn't look too far back. Plan number two is you could wait for a second push entry, and the second push just means you let the signal engage, you allow the market to react, and then you use that price above, you let this reactionary bar become your signal bar, and then you place your trade. This usually allows you to run a tighter stop without having to worry about the market peel too much against you. Because if prices trade higher now, then the momentum will usually kick in. The third option is if you can't afford to set up the trade properly, and by properly I mean running a proper stop, and there is such a thing as a proper stop. A proper stop is usually 2 swings back. So this is not something you want to micromanage. When in doubt, go further back. Like I've had people say, okay, well, there's swing one, there's swing two, that's where I put my stop. No. And then they'll say, okay, well, here's swing one, here's swing two, that's where I put my stop. Well, okay, it's better, but I wouldn't really look at this as a swing. I would say there's swing one, there's swing two. So if you try to place your stop down there, and Trade Manager says, oh, sorry, you can't afford it, well, then maybe you need to pass on the signal. That is a viable trade, or a viable option for a trade, you know, is to say, I can't afford this one, I'll wait for the next one. But we're all so anxious to start making our millions that we rarely take that option. We rarely take door number 3. Okay, one more number 1 signal, and I'm going to try to find you one that's a little prettier, a little bit more textbook. I will point out this one here, even though it did work out, is probably a number 1 signal I would have passed on. And I would have, even though technically it is correct, it met all the programming requirements, I would have probably passed on it because, well, we're back down here. It looks like we've got some swing lows that rallied the market. And where do I place my stop? That's really the obstacle for me here. I'm not so concerned about the market direction because it looks like it came down relatively quickly. Just looking at the timestamps, it looks like these bars had a pretty good pace to them. So I'm not so concerned about the directionality of the market. Rather, where in the world am I going to place my stop? I know I can't afford it up here. And yet that's where I would like to start it. Remember, when you start a deep stop, it doesn't have to stay there. Your objective is only to avoid a premature stop out. You don't want to place your stop right here only to have the market bring you in and then hiccup, take you out of the trade, and then go down to your profit target. That's the only objective with having a deeper stop. This is your safety net. You don't want to have it right there that you get tangled up in it, but you got to keep it reasonably far away. If you're at a total loss, you can always go for the hard edge. Because if this market starts to retrace, if it brings you in and starts to retrace, it's going to try to go to the hard edge. All right, that's the number 1 signal. The number 2 signal, which I recommend you avoid when you're starting out, is the counter trend signal. I will review the number 2 signal for you, because once you get a handle on trading with trend, the number 2 signal can become a very profitable signal, and it can also get you in early as trends change. This is actually a pretty good setup for a number 2 signal, what we're seeing down here. The number 2 signal will occur after a test of the extreme. So the 2 components you need for a number 2 signal. First, you have to have a trend. Then you have to have a test of the extreme and a failure. So in this case, the extreme is the low. Here's the failure. We can no longer reach the lows. The market reverses, and the Raptor will produce a number 2 signal to buy. All right, that's your counter trend signal. If these conditions are here, it can actually work out to be a pretty good little trade. The target for the number 2 signal is the hard edge of the trading band. It gets confusing sometimes for people because sometimes it will still meet the programming requirements, but the market will actually violate the extreme just by a tick or two and then start to reverse, and the Raptor will still produce a buy signal. That's a little bit more advanced number 2 counter trend signal. That's why sometimes you'll see the signal prompts like this, and you'll say, wait a minute, we made a lower low. Where's the number 2 signal coming from? Well, it's actually coming from this. The programming spotted this as a retest, and then it came back and it produced a number 2 signal. Now, one thing I've noticed is that you're going to get more reliable number 2 signals after a number 3 signal prints. So you can see you got an early warning here that, hey, the trend may be reversing as the market trades into the first hard edge. It comes down, gives you another reversal signal. Then you come back with your number 3 signal, your with trend signal. And then this would be the number 2 signal right here that you want to pay attention to. So you could take the first ones if you wanted, but if you're looking for the most reliable signals, hold out for the number 2 signal that prints right after the number 3 signal. And you're probably going to get better follow through on it. The number 2 signal, like I say, the first target is also the hard edge, but sometimes you can get some pretty decent follow through from them. But you do need to be careful. And just look at all this sideways chop. I got to go back here a few days to find you a decent number 2. Okay, here's another number 2 signal. Again, we're getting the retest of the extreme, right? We're looking for signs that the trend is running out of steam. And it may not result in a full-blown reversal, but rather at least a short-term pullback. Another clue is when you're watching your trading band. If your trading band starts to get very, very broad, and it will get wider than this as well, that very often you can expect a retracement to the hard edge. In fact, one of the Raptor owners, he made a point of measuring the band, the width of the band. And depending on the market, he knew when it got to be, 30, 40, 50 ticks wide, that a reversal was that much more likely. Okay, here's the problem with counter-trend signals. If you have a trend, you're always betting against the trend. This is what makes them so difficult. The good news with a counter-trend signal is that you can control your risk a little bit better because you know where to place your exit stop, right? You know where to say, oops, I'm on the wrong side of this trade, time to go. And that would be above the last swing high or low. Notice as well that even though technically the Raptor programming requirements were met here, this isn't a really good looking number 2 signal, is it? Did it get down to the profit target? Nope, not quite. Came up a tick short. But we didn't really have a nice test of the extreme there, did we? It certainly doesn't look like this one up here that I just showed you. Right? That's a much better looking number 2 signal. So the more you can see a market actually test or retest the highs or lows, look for this area here. The more reliable that number 2 signal will be when it prints. But like I say, counter trend trades are always tricky. You will usually do better by staying with trend as much as you can. When I review my journal notes, almost all my losing trades, or I shouldn't, yeah, almost all my losing trades are counter trend attempts. Okay, that brings us to the number 3 signal, and in hindsight we should have swapped the counter trend signal with the hard edge bounce, but oh well. The hard edge bounce, your handy dandy number 3 signal, occurs once you have a trend underway. So what you're looking for is you're looking for evidence that a trend may be developing. Your trading band is going to get broader. You know, prices will continue to advance. You're going to see higher highs, higher lows, that kind of deal. A lot of times the market will have a little bit of a pace to it as well. It's actually, the bars will be unfolding a little quicker than they are right now. With the number 3 signal, it's essentially a bear flag or bull flag that we're taking advantage of. So we've got a market that's trending. We get a little bit of a retrace. These are going to coincide with your hawk signals, your 4 arrow consolidations, and your macro pullbacks. You're going to come down here, you're going to hit the hard edge, and the market's going to try to recover the trend. At that point, you're going to produce a number 3 signal. You can see this one struggled a little bit, but it still made its way higher. You can take number 3 signals off of the first hard edge or the second hard edge. Both are viable. But it is important that you have something resembling a trend preceding it. I'm sorry, that's a little subjective, but generally speaking, if your prices start up there and go down here, you are in a downtrend. If price starts down here and goes up here, you are in an uptrend. If price does more than 2 of those on your chart, you have no trend. I know it seems a little overly simplistic, but very often that's what you need. You need to be able to look at a chart. You need to be able to say, okay, am I in an uptrend? Am I in a downtrend? Or is there no trend? If you look at this chart and you think you're in an uptrend, well then it makes sense to ignore your counter trend signals and just look for your with trend signals. See if I can find you another number 3 signal. You want to pay attention to those times the market gets close to the hard edge but doesn't actually engage it, because the programming does require the hard edge to be touched for a number 3 signal to print. But as you get better with your trend signals, identifying your trend signals, you'll also note those times the market gets really, really close but just doesn't quite make it. This I would have considered a number 3 signal. This might have been a little bit too far away, but certainly this one, a couple of ticks away, I would have considered that a number 3. We haven't had a whole lot of trends, so we're not getting a whole lot of number 3 signals. Okay, here's another number 3 signal. Oh, well, and here are a couple as well. So once again, you have something resembling a trend. You're producing your number 3 signals. Notice we've got some counter trend signals cropping up here. All right, so this is how this would look when this was unfolding. We get the cloud crossover, there's a number 1 signal. Okay, boom, down she goes, hits our profit objective. A little bit of a bounce, comes back, produces a number 3 signal. Okay, let's give it a go. So we're in the number 3 signal. Well, here, let's set this up. So 1 swing, 2 swings back. We're in the signal, and now it's like, uh-oh, I'm producing a counter trend signal. I remember Eric saying the counter trend signal usually works out better after a number 3 signal. Am I on the wrong side of this trade? Maybe, but I do have my exit stop in order, so I'm okay. If the market rallies from here, I'm not going to blow up my account. Let's see what happens next. Oh, good. Okay, the market's coming down a little bit. And good, we produce another number 3 signal. It looks like we're going to get some follow through, and hooray, we hit our profit objective. Let's say you didn't take that first number 3 signal, and you look at this number 2 signal, and you say, oh, well, I got another with trend signal, another hard edge bounce. Let's take that one. It looks like the market's trying to resume the trend. Let's get on board. Okay, so 1 swing, 2 swings back. Now, when we're getting number 2 signals creeping in there, you should be a little bit more cautious. It's not that you want to ignore the trade entirely, because looking at this, I would say, okay, we had uptrend here, we have downtrend now. So for me, looking at this chart, it looks like there's a downtrend. So I'm okay giving it a go. Again, I've got my exit order in place in case something goes wrong. Market comes down and it comes back with another number 2 signal. Okay, now I'm getting a little bit concerned. I've got 2 number 2 signals. Now the market looks like it's going to reverse on me. At this point, I would think, okay, I'm probably on the wrong side of this trade. I'm going to have to think about getting a little bit more aggressive with my stop. I know the market reacts near the hard edge, so I'll probably hold my stop just a little bit longer just to see what happens as it gets to the hard edge. Okay, so there's my reaction to the hard edge. At this point, I'm going to bring my stop in. So if the market reverses from here, okay, I got in at the wrong point, but I've managed my trade well. This is what I would call a good loss. I didn't panic. I did everything right. The signal just didn't work out. And that will happen. As good as the Raptor signals are, unfortunately, they're not 100%. We still haven't cracked that nut. We're working on it. So sometimes the best you can do is take a good loss. All right, so the market continues lower. Depending how aggressive you want to be with your stops now, you see this little wick on this bar? You could bring your stops in there. And then the market starts to drift, and I got tagged out. Okay, so whereas my initial stop was close to $300, here I would have got stopped for maybe about 100. All right, those kinds of losses aren't the ones that are going to cause you problems. So even though the trade did not work out, and I think it ended up, I kept my stop. See, I got my stop a little bit too tight. Had I left my stop above that swing, above the hard edge, I would have done a little bit better. But even if you didn't, even if you were more aggressive managing the trade, it's not a trade you should beat yourself up over. So in response to your question, how can I tell which signals are going to be the best? Well, the best signals are the ones that allow you to keep a reasonable stop so you can at least give the trade a chance. If you can't afford the stop, wait for something better to come along. And then, start to manage your trade appropriately. So here we had this number 2 signal creep in after the number 3. So at this point, once again, I'd probably bring my stop up here. But had I put my stop just below this swing, which a lot of traders will do, look at what happens. Oh dear, you get stopped out. Oh yeah, the market starts going the other way. Right? Initially, that's not where you want your stop. You want your stop a little bit deeper. And then once you see the reaction, then you can bring it in. Because quite honestly, if it fails at this point again, it's probably going to come down here. It's probably going to take out this value right here. Paul's also asking about the Raptor filter. The Raptor filter is actually the Eagle Trend Trader programmed all into this filter here. So it gives you a bigger overview of the market bias. When the filter is red, obviously we've got a more bearish bias. When the filter is blue, we get a more bullish bias. I don't use the filter so much that it needs to be in sync with the signal. Rather, I use the filter more as a clue which way the market is starting to lean. In other words, big pink filter, right? All of a sudden we get a little bit of a blue block. That tells me that the market momentum is starting to shift. So what I want to see now is I want to see a red block that's a relatively equivalent to this blue block, or maybe even a little bit bigger, just to show me that the sellers are starting to take control of the market again. And what happens is, uh-oh, I got a small red block. Okay, it's not definitive that the sellers are losing their grip on the market, but it's certainly adding to it. And then as we go a little bit further, it's like, uh-oh, okay, I'm getting a pretty big blue block here. It's really starting to look like I'm getting a shift in momentum. And once you get better with your Raptor signals, you'll start to identify signals like this as early cloud crossovers. I'm starting to get a little bit ahead of myself. But you'll start to see the bigger picture. You'll start to see that, oh, okay, maybe the momentum's shifting here. My clouds are starting to cross. They're not fully crossed, but they're starting to cross. I've had a little bit of a pullback, and I've actually generated a buy signal. This could be interpreted as an early cloud crossover. Again, the advantage getting in earlier is that you can usually get by with a little less initial risk. Let's take a look at another place where the filter changed. Okay, so we've got a red block and then a blue block slipped in. Red block not as big as the prior one, so again suggesting a little bit of a struggle here for the sellers. A little bit of a bigger blue block relative to the last one. Slightly smaller red block again. And now the blue block is starting to fade as well. So this is starting to show you, again, a sideways market. There's no real trend here. See how we're just kind of drifting back and forth, and that's shown here in the prices as well. There's no real momentum here. Now all of a sudden it looks like the buyers are starting to gain control, so I would start to look for a possible number one signal. Oh, spoke too soon. Sellers are coming back. Now it looks like the sellers are in control, and we produced an early number one signal, which I would not have taken, but now we're starting to get a number three signal. This is a total judgment call. But you can look at this and you can say, well, the sellers had control, the buyers tried to take control, the sellers have taken control again. If this is a trade that I think the sellers are going to follow through on, then go ahead and take the trade. And they come down, and at this point, it's obvious that the sellers have control of the marketplace again. But that's how you use the Raptor filter. It's more for showing you who is in control of the market and when that control is starting to shift. Let's find another one. And a lot of times the blocks will be fairly balanced, especially recently because of the sideways markets. So it's going to look like a checkerboard. You got a blue block, a red block, a blue block, a red block, and they're approximately the same size. Don't try to micromanage this. Don't say, oh, this blue block is only 2/3 of this red block, therefore the reds are stronger and the blues are weaker. No, no, no. It's approximately, yes, the red block is a little bit bigger. The blue block, a little bit smaller. It's true, but it's not something that I would go too crazy on. Here, another relatively large, relatively same size red block, blue block, red block, blue block. So it just confirms that neither the buyers nor the sellers have any control in the market. Let's see what's going on here today. Okay, so we got a big blue block suggesting there's some buying, got some selling going on. The buyers are trying to regain control. Oh, the sellers are getting a little bit stronger. The buyers are starting to slip a little bit. And now we're getting a little bit more of a downward bias, which will make me open to a number one signal to the short side. If these clouds start to cross, I get a little bit of a pullback. I come out here with the signal. It will be a number one signal. The red block should be getting bigger. And then I'll have an opportunity to short. Phil asks, where on the indicator warehouse website can I do an intense study of the Raptor signals, video training? Well, if you're looking for video training, make a note of today's date, November 20th, and you can review it at your leisure at the Indicator Warehouse YouTube channel. And I will show you where that is. Okay, so if you go to your YouTube and you search Indicator Warehouse, you're going to get Indicator Warehouse Indicators and Trading System. So click on that and bookmark the Indicator Warehouse video page, and you will have the video up here. In fact, I may recommend to Adam that he separate this video. That's really the nuts and bolts of it all, folks. We really did try to keep things simple. I know a lot of times you're looking for more. The more comes from the using. And not necessarily live trading like what we're doing now, but just grabbing your scroll bar and rolling back into your chart and just stopping at random and looking at the signal. Okay, so here's a number one signal, and just pretend, okay, here's a number one signal. Would I take that signal? Well, it's supposed to be a trend change. I have had a retest of the extreme. In this case, the extreme is the high. Doesn't look like there's a discernible trend. And I may end up getting stuck in a sideways market. So what do I do? Well, I can pass on the signal. All right. Do I want to pass? No. All right. So I can wait for a second push entry opportunity to see if the market reacts to these lows. All right, let's try that. Okay, it looks like this bar was the reactionary bar. So sometime during the life of this bar, it actually traded up here at 62.92. So that would have allowed me to enter below that bar and get by with a tighter stop. Okay, so there's a possible trade. Now play it forward and see, did that trade work out? No. Okay. Now the big question. Why? Why did that trade not work out? What did I do wrong? Would that trade have worked out had I taken the signal right on the hash mark? Let's see. No, got close. It would have hit my break-even trigger. I would have got out at break-even. Okay, so note to self, if it looks like we're trading near the bottom end of a trading channel, I might as well get in early because I'll have a better chance. Okay, so we learned a little something there. But why did this trade not work out? Well, it probably worked out because of what preceded it. Right? Looking at this chart, we know the market is sideways. So why should I be surprised when the market breaks out and doesn't follow through? That's exactly what it was doing all this time beforehand. For the last 12 hours or so, it was just 10 hours. It was just going sideways. Why should I expect any different now? Okay, so we learned a little something by doing that. And you do that all the time. You just go through your charts and you analyze each signal. And you look, okay, well, did the signal work? How could I have made it work? If it did not work, what did I do wrong? And if you're stumped, if you can't figure out why the signal didn't work out, take a screenshot, right-click on your chart, go to image, and you can either email it to me directly or you can save it onto your computer and then email it to me and say, Eric, I took this signal right here. This was the time, this was the day. Why did it not work out? You got to give me the time and day so that I can see the chart, especially for those of you who send me charts that are this big. You say, hey, Eric, why did that trade not work out? Because the thing I'm going to be interested in is the context. The very first thing I'm going to do is pull up the chart, the signal that you took, and I'm going to look at the context of the chart, and I'll probably write you back and say, the market was stuck in a trading zone. It was stuck in a sideways trading range. That's why the signal did not work out. What do we do, class, when the market's in the sideways range? We let it break out and prove that it can stay out. So we let it break, we look for the retest, we let it prove to us that it can stay out, then we take the signal. And once it starts to drift back inside the trading range and get somewhere toward the middle of the trading range, there's no longer any bias to this market. But that's, you know, that's your homework. I can only take you so far. Some of it you have to do yourself so that you can gain confidence with your signals. And then, of course, there's the whole over-trading thing. And we've discussed this before as well, where I think it's very important to your success that you limit the number of trades that you take every day. I think you should only, starting out, depending on your account, of course, but look at taking one trade, one trade a day. If you're only going to look for one trade, you can afford to be picky. You can afford to hold out for that best looking signal. You don't have to chase every signal. In fact, taking every signal is a good way to lose money. But like here we are, we're an hour in. Okay, we had a couple signals. Yeah, that first one would have worked had I taken it on the hash mark. But it was early, so here we are. The market has a slight downward slope, but we're getting a cloud crossover. It looks like momentum might start to shift. If the market trades lower from here, there's a number one signal. If I'm looking at just one signal in the day, that might be the one that I'm going to try. If it works, great. If it doesn't, well, I haven't blown myself up. When you get to the point where you can profitably trade one time a day, try to ramp that up and see if you can't do it twice a day. Once you're good at finding two high probability signals in a day, go for three. But that's really where you should max out. When the trading is really fluid, when you've got a reasonable amount of volatility, the signals are following through, you may take four. Some of my best trading days have been where I've taken 3 or 4 signals. Some of my worst have been where I've taken 8. That's the part that baffles a lot of people. They think they need to trade a lot to make a lot more money. And then they'll, I get these emails all the time, your system doesn't work. Why do you say that? Well, I've taken, all kinds of signals. I can't even find bad signals now. I took this signal. It didn't work out. Yeah, okay. Well, truth be told, some of the signals will not work out. But again, was that your best opportunity on the day? Well, it wasn't a terrible trade, I guess. It would have been worth a try. The problem with this number 3 signal is we got a couple number 2 signals cropping up here. So that tells me, as far as the programming is concerned, the Raptor is spotting tests of the extreme. It's spotting retests of the low. It's not to say that number 3 signal won't work out. It's just that, okay, if I'm going to take it, well, maybe I'll look at a second push opportunity. Make sure I've got some renewed momentum to get me in. The problem I really have with this trade is the stop. Where do I put the stop? And see, that's what the trade manager does. It says, no, sorry, that's too expensive for you, Eric. You can't afford it. Wait for the next one. All right, so here the clouds are trying to cross. We're trading in slow motion. This is just terrible. I will sim the trade for you because there's nothing else going on, but I would not recommend real money on this one. Paul asks, the NASDAQ has produced a head and shoulder pattern this morning. Do you consider that as viable? Yes, definitely. Again, it just shows you the test of the extreme, right? It shows you that the buyers are having some difficulty holding on to the marketplace here. Mark. Mark's brave. Mark says, took my first trade of the day on that Falcon trend change slash late filter entry to the short side. Just barely made my profit target, he said. Rick says, I show my minute chart settings, but I can't get the ticks to show up. Yeah, your ticks won't show up here. You need to actually click on your data series, either that tab right there, or if you right click, and that will bring up this window, and then you can adjust, you can select from all your different chart styles. Well, gang, this is, oh, good, a couple more questions. I was going to say, this is downright painful here this morning. In fact, I am really tempted to call it a week, just take the rest of the week off. Tomorrow's not going to be any better. Keith is asking, so my Raptor is not showing the #1 up signal, and I am showing an extra #2 down signal. Is there any reason to that? I've reset my sensitivity to 1.25. Let me refresh mine. Mine might be the one that's off. No, maybe not. Ben, somebody just wrote a similar question the other day, and Ben CC'd me on it, and I'm sorry to say I only skimmed his answer. But what the Raptor does is it actually looks at about 3 different things when it prints all these different signals. And even slight variances in how the data is collected from your data provider versus my data provider may be enough to produce the signal a little bit differently. So I've got 10 days loaded. I'm running the default 24/5 session template, and I'm using kinetic data. Remember, though, that these are just prompts, right? Your signal, I'm assuming that you probably still printed a signal somewhere through here, even though it didn't actually print the #1. See, here we're getting the early cloud crossover signal that I mentioned to you. If that's the case, it's nothing really to be concerned about. Like I say, these are just the prompts. These are just to alert you to possible trading opportunities. All right, so here's the early cloud crossover signal. Cloud's not fully crossed yet, but all the parameters are there. We kind of changing direction. We're kind of taking out some of these lows. We've had a little bit of a pullback. Even got a chance at a second push entry on here. 1 swing, 2 swings back. And I could even, given how the market's pulling back, I can even catch it on the hash mark. Again, not a trade I would recommend. The market's just painfully slow right now. But I think we may end up with a drift back here to the median line. Yep. See you, Scott. I'm thinking we're going to button things up for the week as well. Scott says I'm not sure I'm going to be here tomorrow. If not, have a great week. You too, Scott. Enjoy your Thanksgiving holiday. Rick writes, I've got 8 ticks, 10 days of data on the NASDAQ screen and not getting the correct screen results. Okay, try this, Rick. Try going, hit your F5 button, and if you want, you can also reload all your historical data, which I'm going to scrub this trade and do that as well. Thanks, Phil. Happy Thanksgiving to you too. And you know what, folks? The more I think about it, the more I think we're going to call it a week. Tomorrow is going to be just like today. Wednesday will be a write-off, and then, of course, Thursday is the holiday. Friday, non-existent. So you may as well enjoy a little downtime. Because there's not going to be any follow-through here. The markets, unless something happens on the world stage, I don't think we're going to see anything big going on. Dan says, I'm upgrading my PC. How do I transfer my programs to my new PC? That is a Ben question. I'm sure there's an easy way to do it. And Ben or support at Indicator Warehouse. That's Ben's email. Shoot him an email and he will point you in the right direction. If you still have the executing file from your original download, that's probably the easiest way to do it. Otherwise, I think, no, I'm going to leave it to Ben. That's really up his alley. That's nothing I can really answer. Oh, Scott says, I had marker issues too. Double check the session template. I think that's under the data series also. Oh, session break line. Oh, there it is, session template. Yeah, default 24.5. All right. Rick says, I did the F5 and the cloud does not line up correctly in the candle window. All right. Let's take a look at the cloud values. So go to your indicator window and then highlight your Raptor version 2. Or you can do as I did, just double click on your Raptor cloud and it will automatically take you there. And then we're going to pull down here, about halfway down. We've got the clouds, we've got the brick size. The defaults are 12 and 8. And then we've got a 6-tick brick for the hawk. And that should sync things up for you. If it still doesn't, then please send me and Ben a screenshot. So you're going to right click on your chart and you're going to go here down to image and then save the image. And you can attach it to an email. And then email it to either to Ben and myself. those kinds of technical issues, Ben is probably your go-to guy. And as I mentioned, this video is going to be posted later today, so you can reference all this stuff again at the video. But if your clouds are looking a little bit different than mine, like I said, you can double click your settings. And see if they're set at 12 and 8. Again, these are the defaults. And a 6-tick brick. Oh yeah, okay, Rick says way off, one flat line. Yes, then something is, check your Raptor cloud settings. It's probably in there. And if you're running an 8-tick brick, yeah, it's got to be in your settings, Rick. That's the only thing I can think of. All right, gang, it looks like the market's going to try a little uptick now, retrace back somewhere near the highs of the day, and that's not a big surprise. Yeah, no problem, Rick. Rick says I'm new to the settings window. It takes a little practice. It's not a steep learning curve, but it does still take a little bit of time. All right, if there are any other questions, please ask away. Otherwise, we're going to button up the room here shortly. Okay, Rick, I'll wait. Okay, Rick says I was using the 3-minute chart, got a bad short when I was going long. Should I trade tick only? Well, yes, if you have tick data, I would take the tick data over the time data. Some brokerages don't provide tick data, which is a shame, in which case a 3-minute chart is a rough approximation. It's not quite as nice as the tick data is. So if you have the chance to use the tick data, then yes, I would go that route. The nice thing about the tick data, especially coupled with something like the mean Renko bars, is that you get a better visual of who is controlling the market. It's obvious that there's support here at around the 63.16 mark. It's obvious that there's, secondary resistance around 63.26, stronger resistance at the highs. You don't always get that kind of information from a time-based chart. So that would be my recommendation. Of course, if you have any other questions, you can always reach me by email. Technical questions, like I said, I'm probably going to have to forward to Ben anyhow, so you can, if it's a technical question, by all means, CC me on the email, but Ben's probably going to be the primary on that. And Ben can also get you guys hooked up, Dan, with your transferring issue. And Rick, if you can't crack what's wrong with your clouds, like I said, send Ben and I a screenshot, and Ben might be able to do a remote assist and actually get you up and running on that. But in the meantime, honestly, folks, I don't think we're going to miss out on anything if we take the rest of the week off. So enjoy your Thanksgiving, enjoy your downtime, and I will see you next week. Bye for now.